Hey guys, Jeff Beers here from the 40 Finance channel, and today I'm going to do a review of one of my favorite ETFs that I'm also a shareholder of, the IYC Consumer Services ETF by BlackRock. We're going to dig into what makes this a good ETF for those who like to invest in the consumer sector and why I prefer this option over some of the others out there right now. Okay, so the iShares US Consumer Services ETF seeks to track the investment results of an index composed of US equities in the consumer services sector. So consumer services is a little bit different than just consumer products, right? So if you think about some of the dividend aristocrats like P&G, General Mills, Heinz has been in the news a lot lately for all the wrong reasons, but those are sort of consumer producers, and these are consumer services. So it's more the end point between the product and the consumer itself, aka a lot of shopping, a lot of discretionary spending, travel, things like that, all based here in the United States. So I'm a big fan of the US market. I probably should diversify more outside of it. The USA is really the gold standard right now in terms of equities, and particularly from a consumer standpoint, our consumer groups are much stronger than some of the others that you see internationally. Obviously, Europe's having some problems. China will probably unlock soon once the trade tariffs go away, but it's hard to really beat the return on US consumer compared to their peers right now. When you look at consumer spending, this is not the ticker for the ETF, by the way. This is just consumer spending. You kind of see my point on the rock solid foundation that United States produces when consumers spend. This goes back to 2000, and this is the billions of dollars in spending. And regardless of what the numbers are over here, you can see the trend line, of course, is what attracts me most. And frankly, you could take this chart back to 1950 if you wanted to and go through all the different recessions and all the different things. And you're going to see an ebb and flow. Like here's the housing crisis right here where you're, for all intensive purposes, barely negative in that stretch, which is a very stressful time for the American consumer. But the spending goes up, population grows, things cost more money. Banking on this kind of growth of the US consumer is not much of a gamble at all, okay? Of course, you're going to have economic events that will stagnate the growth, but generally speaking, pick any stretch of 5 years, 10 years, 20 years more, you're going to see this type of growth for United States consumer spending. And I personally don't see much that says that trend isn't going to continue for a long, long time. So the iShares ETF includes a conglomerate of places where consumers spend money, basically. It is a weighted ETF, so stronger performers, bigger performers flow to the top. But the top stock by a mile is Amazon with 19%. I don't think that's a really big surprise for anybody. And from my portfolio standpoint, this is the only place that I hold a piece of Amazon. So it's very nice to have a 20% exposure to Amazon in places where I haven't otherwise invested in them. Then you have Comcast, Disney, Home Depot, Netflix, Walmart, McDonald's, Costco, Starbucks, Bookings Holdings, which is a travel company, Lowe's, TJX, Charter Communication, and 21st Century Fox. So this is not the complete list of the stocks that are included in this ETF, but it gives you a very good idea of how this works. So McDonald's, just to pick one out of the screen, is a stock from a long-term standpoint that I've always sort of watched and been intrigued in, but I've never bought any shares myself. But this gives me that exposure to McDonald's. I think Home Depot and the whole homeowner cottage industry that comes along with that is another place where I think is money well spent. I have exposure to there. Lowe's is also in there. And then travel and entertainment is a big part of American lives, quite frankly. And you've got the best of breeds for all these, all wrapped into one ETF. And it makes it convenient for guys like me who don't have $5 million, right, to dole out into individual stock plays. But I do have enough to spend a few $1,000s on this ETF and get exposure to tons of great companies. When you look at the performance of the iShares Consumer ETF, the price right now is right about $200. There is an expense fee of 0.43%. I see a lot more ETFs. Expense fees are growing beyond 0.5%. So if anything else, I would say that this one is on the cheaper side at 0.43. And this performance chart here goes back to, looks like about 2014. So it's a 5-year chart. And this is the performance of the iShares in blue versus the S&P 500. So the top 500 stocks in the S&P index. So you can see that the iShares ETF outperformed the S&P 500 over the past 5 years. It's a pretty strong correlation too. The growth over this stretch on this chart is noted at 68% versus 48% for the S&P 500. And there's been some times that they've run close, and I've run this chart 10 and well, it probably doesn't go 20 years back because the iShares ETF wasn't even available then. But I think I ran it 10 years back, and there was a year or two where S&P crossed over that actually performed better. But for the most part, you're getting a safe investment here that over the past 5 years has outperformed the S&P 500. It's focused on US consumer. If this is something that, if you believe in the United States consumer, if you believe that consumer spending is going up for the infinite future, as I do, then this is a really nice ETF to add to your portfolio, get some exposure to many of the great companies I mentioned before. Long term for me, I really want to be at a place where I'm about 70% ETFs with iShares. I talk about the FDN ETF, and I've got a couple other smaller. I'd love those to be 70-ish% of my portfolio. And then the 30% on individual stocks will be more of an experimental channel. I just did one on Turtle Beach, which is one of my favorite individual stocks, even though it's kind of on a roller coaster ride right now. So for me, an ETF like this is a fundamental part of my strategy. And so far, the results have been great. So that's my review of this ETF. Hope you guys enjoyed it. You cannot bet wrong on the US consumer as long as you take a holistic approach to it. That's my personal opinion. Let me know if you feel the same. Please subscribe to the channel if you're interested. I'll see you on the next video.